Good morning and welcome to this edition of the video market analysis from Securities. Today we'll start our video with a look at the US economic figures that were released yesterday, with more and more weaker figures raising more red flags in question regarding the recent deterioration. In line with our expectation mentioned in our reports yesterday prior to the release of the US GDP, the US Q1 GDP shrank by 1%, while the general consensus was to shrink by 0.5% only. First of all, it is not only the first contraction since 3 years, but it is also at the fastest pace since Q1 2011. This means that the rest of the yearly quarter GDP has to grow around by 5% in the second half of this year to reach the Fed target between 2.8 and 3%, which we believe that it's hard to be achieved. On the other hand, also pending home sales disappointed in April. Month-over-month increased by 0.4% only, while it had been anticipated to rise by 1.1%, and the year-over-year also crashed by 9.4% comparing to minus 7.5%, what had been anticipated also to decline by 8.7% only. Keep in mind also that these numbers are for the month of April, meaning it is after the bad weather period. Despite that, the numbers aren't improving, and the Fed also and the market, or as the Fed and the market expected. Despite these figures as well, the markets ignored them again. The stocks hit a new records high, while the US 10-year yield slipped to 2.4%. The reason behind this decline of this move is the market still believes that the Fed policy or still believe that in the Fed policy and the Federal Reserve forecast as well. However, when the markets realize that the economy is deteriorating and the Federal Reserve could be wrong, this would be the game changer. Next week will be also significant for the US, as further economic figures will be released and may prove that the economy is still deteriorating as well. As for the US to the Asian session today, Japanese figures continue to show the sales tax high negative effect. First of all, household spending declined by 4.6% in April, which is the biggest drop since the tsunami, and industrial production also posted the biggest drop since the tsunami by minus 2.5%. However, inflation keeps on rising. National core CPI increased to 3.2%, and Tokyo CPI also increased to 2.8%. With the inflation accelerating, more easing by the Bank of Japan is off the table for the time being. However, further economic deterioration will bring it back on the table, maybe in July or August, and this is why the Japanese yen is rising today. In Europe, we'll be focusing on two economic data sets today. German retail sales may rise by 0.4% in April, while the Italian CPI may show no growth in April as well. As for the US session today, further economic data sets will be released today. Beginning first of all in Canada, monthly GDP is expected to grow by 0.1% in March. And in the US also, we will be waiting for the personal spending, which is set to rise by 0.2% after a rise of 0.9%, and personal income may rise by 0.3% in April comparing to 0.5% in March. Its Chicago PMI also may decline back to 60.8 in May, down from 63. And finally, the revised University of Michigan consumer sentiment may rise to 82.9 in May after the initial reading of 81.8. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. I'll be in Jordan next week attending the Jordan's Forex Expo on the 3rd and the 4th of June. Hope to see you all there. Have a good weekend.